of experience to help you manage your portfolio and protect your wealth. Remember to subscribe, like, and share these videos. Really sorry for the delay today, folks. Had a major catastrophic issue with Streamlabs. They updated the app and reset all my settings, so I couldn't figure out what wouldn't work. So in today's video, what time we have left, I will go through what I believe is one of the biggest stories out there. I talk about it every quarter, which is the manipulation done through earnings. Let's get into today's video. Hey folks, welcome. Like I said, sorry for the late start, like 1 hour late. We'll do this last hour together. There's some things I do want to talk to you about, and some of the setups that we're seeing across the board on the markets. And you'll have to bear with me. I've just spent we're going to talk yen here in a minute. I just spent the last hour in total frustration trying to fix all the settings on Streamlab. They did an update and literally wiped out all my settings. I didn't realize what happened. So we're back and running again. So I love these software updates they're constantly doing. Moving menus, you can't find how to use the program. And of course, I'm an old boomer, so I'm not ready for all these menus. So anyway, for these changes, all going well. As I always tell you folks, when I'm out of town, yesterday I was out of town, completely out of pocket to even comment on the markets, and guess what? They go crazy. So we get this big reversal, and then after markets, we see the move here in some of this stuff. Now I have one thing I have to set up here, just so you're gonna have to bear with me while we get things set up. So go ahead, and if you have any questions, go ahead and put those into the chat, and I will make sure as soon as I get this one setting, I'll be ready to roll here. So I was just trying to get live as soon as I can. So one last setting, and then we're good to go. So I hope everybody's having a good Friday. Certainly a crazy movement here for sure. Sorry, this is just taking way longer than it's supposed to. Yeah, nobody shorted Tesla, haha. Yeah, everybody was short, right? That's why they're still trying to unwind that trade, for sure. I have got everything finally set up. So thank you, folks. I'm just trying to be as efficient, trying to get back up online here. Thought someone, maybe someone did plug in. Hey, you might have seen on X, I made a comment that I have an M4 competition, and I said, I love my M4. I'd rather have that than a Tesla. And every guy that owns a Tesla, I think I have 43,000 views on this tweet. And everybody's telling me what a piece of shit my car is and all that. It's just amazing. I mean, you kind of see where the head, everybody's head is. You're kind of playing the globalist agenda, everything electric, air quotes. It's just kind of interesting. And just very aggressive people just telling me basically how stupid I am. Meanwhile, the entire electric vehicle fleet is about 1.7% of all the ICE vehicles, so they got a long ways to really. I guess they got to scream loud. They're pretty. I guess. Yeah, they don't have a lot of confidence in what they're doing. They have to scream and share. They get 5 colors though. And anyway, so it's sort of like the Model Ts I was thinking about back in the day, and maybe this is the new evolution. I still think hydrogen engines will win out, and especially Toyota makes like 10 times, almost 11 times the cars that Tesla makes, just one company. So anyway, let's get into some of the markets. Like I said, I'm still trying to get some things set up here. I was just trying to get online so we could do this, and I think I'm finally getting there. One of the things I want to talk about, it was kind of the title of this show, so I'm just letting the room while we're chatting here getting filled up since I had such a crazy schedule getting going. But one of the things that I talk about every earnings season are the analysts just that bad? Let me pull my notes out here. Are the analysts so bad that they're 60-70% of the time they're wrong? And why is it that every earnings season everything beats the expectations, right? So why is that, right? I realize, if we go back and we take a look, and I'm just trying to bring something up here, and of course everything is crashed, so let me just bring something up that I had here that I think is interesting to talk about. They tried to clean this whole earnings thing up, so I'm going to go into this while the room's filling up. They tried to clean this up back in the late 90s because there was obviously people front running their positions and buying before the reports came out, and I have to believe that's still going on, even bigger than ever. You can see these crazy jumps, like Google, one of the largest companies in the world, changes by 10% over a better than earnings and maybe announcement of a dividend. That's worth 10% on one of the largest companies in the world. And then of course, I'm not a Tesla fan, not a car fan, not a company fan. I do like Elon Musk. I'm not a Musk hater. That's not who I am. But you just have to know that it's still a meme stock. Tesla's a meme stock. It's not like a real company. It is a real company. But if you look at their earnings, they're starting to get some negative positions going on in the company. So let me go back to this earnings thing. I'm sorry, I'm jumping around trying to get into a flow here. But one of the things that happened back in the 90s is they tried to get the analysts to report whether they own the stock or not, and they were trying to get that bias out of there and trying to get this manipulation thing out. And if you have to realize, it's almost like Wall Street. You can look at every earnings and we get a bump. I made a comment, I think, on one of my Substack or one of my YouTube videos that what we were looking at is, will earnings cause the markets to recover? And yeah, they do. They always do. I only remember one time that there was not an earnings bump throughout the year, and that was 2001. And especially after 9/11, that it even got worse. There was just companies would report maybe missed by a penny, and they dropped the stock 25%. And so all this stuff, you have to realize that in the end, we're dealing in this manipulated world. I guess I'm in this conspiracy mode, especially after being frustrated for an hour trying to get software to work just like it worked yesterday or the day before, because I changed nothing except for this update came through. I normally don't do them before a stream, and I did that about an hour thinking everything was fine, but here we are. But this is the thing with these earnings. Is it's becoming more and more obvious that all of a sudden all the earnings reports are better than expected. The companies are also playing into this, that when they do their forward guidance, they shoot really low. They know they're going to probably beat them based on flows that they have coming in the company and depending on what type of business they're in. So everybody knows this game. And so it was pretty simple to see that, we're going to see this bump. And if you think about it, it's even more interesting. You got Microsoft and Google and Tesla are, now Google came in better, Microsoft came in better, but then you look at Meta, right? Let's bring up Meta, poor little Meta. And, they come in pretty much as expected. They pummel that stock for 10%. Everybody really hates Zuckerberg, right? And then Tesla misses by, 20%, and the stock goes vertical. right? Why? Because Elon's on there, oh, we're going to have cheaper cars and all that. And Elon's on record, by the way, and you can find this video pretty easily. He was talking about how all the major companies automakers make their money through service and high margin parts. So they're planned to break. That's why we're all at service stations all the time. And he said that's why the model works, because you can't make money just selling cars. So Elon will say has designed a car low maintenance, and now the margins are dropping substantially. So they're going to lose. There's no doubt about it. There's some negative cash flow, like billions of dollars going on. Everybody's telling me, oh, Bob, they're reinvesting in the business. That's fine. They're going to reinvest themselves out of existence, in my opinion. But my point is that the manipulation of what we see and the reaction by the markets, and now we have a lot more investors in the markets than we had before. So everybody's responding to these changes in, like when we see these earnings reports, and then you get the stampede. I absolutely hate days like today. I'm just going to bring something in here, and I'll just split screen here for a second. And this is the S&P. We're looking at some big numbers here from the standpoint of, let me change screens here. Let's go over and put ES up here. We're looking at some big numbers here, right? We're looking at another 1.16%. We're right up at the top end. This is daily. The market grid is 5144 is S3 or R3, and RXT is 5160. And if you've watched this, we've traded right into 45, 46, and we've rejected out 8, 10 handles each time we've traded up there intraday. But this is right at the top of this. And now if you look at the algos, I talked about this in the Substack last night, that the algos are turning up. It looks like they're going to try to punch them up. We have 3 new Fibonacci projections. Fib target 2 is actually suggesting that we're going to make an all-time new high out of this pattern. I still question that a little bit. I think we have to get over 5220 is going to be probably the top end of this range. But my point is, all of this earnings and all this manipulation is playing into this, right? This is perfect. How does Wall Street make its money? Through transactions. How does it, it's becoming unbelievably obvious, and I made this comment to some folks, some of my boomer friends and other folks that I know that are a bit younger, and I've said, is anything that we thought was real actually real anymore? We get more and more information, presented to us every day, only to find out that that wasn't true either. So I would argue that this quarterly party that we have around earnings, and you turn on CNBC and Bloomberg and all the talking heads, they're just talking about this earnings and how good this company's doing. It's just a hype job. It's amazing. It's taken me 40 years to figure this out. I've been talking about it for a long time, but now it's finally become obvious. And some of the things that happened here from the standpoint, I think that that this analyst underestimation is a real thing. I think you think about it, all the inventory on the big firms, the Morgans, and all the big players in the markets, and it benefits all of them to see these stocks act like this. So I think I'm probably done. Then I think I've sunk my putt, but you get my point, I think, is that we're really just continuing to see some things here. I went on chat to ask some of this stuff, and it basically, you can't read this, but it's basically agreeing with exactly what I was saying here, is that, yeah, that could be a thing that you're talking about. It said it had to acknowledge. I sometimes love to have arguments with ChatGPT, especially on the phone app, and you can talk to it. It talks back to you. It's a lot of fun. I have a lot of arguments with chat once I'm sitting there. Instead of looking at TikTok, I argue with ChatGPT. Sometimes I learn something. Anyway. Yeah, and EV is the new iPhone business model. There's no. I almost joked on this thread that I was on, just looking at some chat here, that basically Teslas are iPhones with wheels, and that's fine. You know, I like the sound of my engine when I press the gas pedal down. I don't like a whining electrical sound. I have ridden. Probably 1,000 miles at least in a Tesla. So I have experience. I have driven one. I've done all of that. No thanks, you know. Yeah, I love the comments. This was one of the things I was having trouble with. Every time I tried to start, it said that the chat was blocked out. I couldn't do without you folks. I love your comments here. Yeah, and finance as well. And you think about it now, Elon has figured out one thing, though, back to Teslas, back to cars, is that one of the things that has been figured out is that well, you don't have to get the expensive, but you just charge for your, driving. You know, so you get $100 a month on a few million cars, you make some pretty good bucks, right? So there's definitely some money in that. Maybe in the end that they don't even make cars anymore. They license out their FSD and some other stuff, and that's what they do. Maybe they end up a robotics company. I don't think cars are a very good business, and they never have been, actually, for the most part. You can just look at the history of the automobile business and see that. I'm just looking here. Yeah, so here's the deal. I see somebody, I love your, this is what I proposed, and nobody on X responded to this. I want to have a 2,000-mile race, and I want to see who gets there first. So we go from where I'm sitting right now to New York City. We both take off at the same time, and we'll see who makes it there first. I'm betting you I could watch probably at least one, maybe two full-length movies in some city. I'll stop at AMC and watch a new movie and still beat you. Okay, it's really good. I call them they're like golf carts for around town. You know, because they're good regional vehicles. There's no doubt about that. And but yeah, I know. So listen, folks. This has been probably one of the more frustrating moments. I appreciate everybody hanging around. We'll get into some analysis. I always hope we can get some trading done. Trading in this mess that I'm looking at. Let me go over to a screen. Let's just take a look at a couple things here, and see if I can show you a little bit about what's going on here. So here we go. All right, so this is my typical setup that I have. I have a 5-second chart on the top left. We've got a 1-minute chart on the right, lower bottom, a 1 hour, and then we have a 5-minute. And this is typically my trade setup, and then I usually trade off of TradeStation here, and but we're locked in this range, so we're really range bound. About all we can do is doing some scalping, and I don't see that as a big advantage of anything. So let's go back and let's just talk markets for a few minutes. Hey, Jagan, I'll answer a question. Give it to me. Yeah. Yeah, so there's a couple of things here. Yeah, just ask any questions you want. Yeah. Yeah, from the yeah. Listen, I don't know this. It's funny, this I'm just watching the chat here. We're all still stuck on. Yeah, we'll do some stocks. We're going to do Japanese yen in a minute. And if you recall, I think it was 2 weeks ago. Just going to see if I can. I'm just bringing up Substack here for a minute. Let me get one of the things that I wanted to look at on Substack is really just looking at the when I first mentioned the yen. Then we're just going to get focused on the yen. Yeah. I'm just. Yeah, there it is, Jagan. Just let me see what you say. I want to purchase indicators this weekend and need to set up TradingView. So you need to set up TradingView first, okay? And then once you have a handle, then you'll go into Kendall Report.com/indicators, and then you'll click on purchase, and then what will happen is in that dialog it will show you, it'll ask you for your TradingView handle. As long as you put that in right, you'll get them. I think it takes maybe 10 seconds, and automatically once your purchase is confirmed, it's on there. You will also get emails to the training videos, and if once you get signed up, if you request, there is a small upgrade to get the 2-day seminar that I did last fall. You can get that as well, but just look on that deal there. Matter of fact, let's just make this official. I'm not sure anything on my computer works anymore. I hate Windows 11. Did I say that? Here we go. Just a second here. I'm trying to bring up this. Okay, so Jagan, this is for you and anyone that's interested, and then we're going to get into some good analysis here. Yeah, hey, Snook, you're right. Listen, I should raise my prices, right? $8 a month is a steal. And, you know, the numbers are good, so I appreciate everybody signed up. I think we're up over 1,800 or something now. But this here is the way that you go there. You go to kendallreport.com/indicators, and on here, there is, I think this is a 48-minute presentation I make there. There's a lot of information just on this video, and you come down, and all you have to do is click on the buy now button, and you're off and going. So all right. So yeah, so that should get you there. So hopefully, and you can email it in. We're kind of watch pretty good the emails over the weekend, so we can help you get started here. Let's do this. See if I see Jeff saying we're getting a little topping here. Yeah, it's trying to do a little something here. But this range we've been whipping around in is pretty locked down. I wish the screen wasn't so small, because I have over here, I have 6 monitors behind me here that that will give us a much better view. I've not figured out how to get there. So let's do this. Let's go and let's go to the yen. And this is a daily yen, so it's just blowing up here. And you can see we've got some fib targets. I talked about these before. We're looking at around let me get these numbers, 150, 158. Yeah, 158. 158.37, 159.66 are the Fibonacci targets above here. And you can see this angle of attack here on this moving average. This dotted line is the indicator showing the projections of where it's likely to go. So we're seeing some pretty strong stuff. You can see the PPMs here down below are really in what I call a trend maintenance mode. So you're looking like up into May, and let's go to the next level here, and let's take a look at the weekly chart, and you'll see we've got some big Fibonacci targets on the upside here on a weekly. We're looking at right now, we've met fib target 1, which was 157. We've gotten through that. The number is 157.11, and that is looking like that's blowing through. The next level is 161, 163. All right, so I'm going to bump this up to the next level yet. And this is where things get even crazier. And this is going back to 2006. There is a longer version of this. Let me just do this again. Yeah, this is a little bit better version. I've had this discussion with you folks before on the yen, and what this is right now, what we're seeing is this monthly graph, and what this is suggesting that we're fairly close, a couple months out. Can we hit this first monthly fib target? And that number is big, 176. That would basically correlate with some of these numbers here on a weekly. We're looking at 163. What's the daily targets? Yeah, so the monthly target is fairly realistic. We could see one more surge here to the upside, but what the algos are suggesting, let's take a look at this. The algos are suggesting that actually that we're peaking out in this range here, 157. I've talked about this. If we get to 175 plus on the yen, this is a disaster scenario, and this is something that could actually bleed over into the broader markets. And so, meaning that they held things down in this quantitative easing for 30 years? And now they're trying to get out of it, and it's causing a lot of flows to be much different than what they were prior to this move. And you can see if we come back over here into, last year they started talking about this rhetoric on yield curve and everything else they're doing, but now it's full stream here, and you can see what's going on. But what I want to contrast here, this chart goes back to 1971, And you can see during back in the 1994 is when the yen got really strong, and if you go back into the 90s, the Japanese were running around buying every major property there was, and including like the B of A building in San Francisco, and I think they bought Sears Tower at some stage. They were just buying everything because and the yen was so strong, it was amazing. But even though we were actually challenging somewhat, let me get the numbers up here. We're challenging some of these levels that are were above 147, which were the highs in 98, and yen got strong again, and now we're challenging this. But when you look at this bigger picture, and I've talked about this, we're most likely probably going to the 175 level just with the momentum, but we're going to find this out within the next 6 weeks. And the way that we act, I'm going to go back to the weekly chart here. The way that this chart acts is going to is going to tell us a lot about the next several months beyond this. If we look at the algos on the weekly, you see a steady upflow angle of attack. This tells us that there's still going to be a decline in the yen. The dollar is still going to be very strong versus the yen, and that's going to put us up to about the levels. I'm going back and forth to this monthly chart where the monthly is peaking out somewhere here, not until close to year end, by the way, until the end of this year. And then what we're likely to see, some flattening off and some stability. But the question is, will that stability come at 175, or is that going to be, what type of configuration we're going to get? Otherwise, are we going to spike up to 175, come back in, and that be a climactic mode, and then we set this sideways tone that's being suggested here on the screen? Or and I'm kind of leaning that way, but the real question is, like I said, I'm going back. This is a weekly chart now, and what I'm looking at here is that let me blow this up a bit so you can see it. We do have these fib targets in here that are lying in, like I said, looking at 163 is the top end, but it's still coming into in this case, probably into around year end, maybe into the first quarter of 26. We're still looking at the yen depreciating during that period of time. I guess at some stage, everybody will be going to Japan and buying things there. Maybe Toyota will be for sale. Who knows? But the point is that it looks like this yen depreciation is going to continue. So let's take this over. And let's now, this is the 10-year treasuries, okay? So now we're going to, this for me is going to tell us what we're likely to look at. This is a weekly chart. This is 10-year notes. And you can see the algos. I'm going to show you the PPMs here in a minute. The algos are showing that interest rates are going to decline into 2026. So I would argue that maybe the yen is not going to be dominated just by interest, but there's going to be interest rates here in the U.S., but more so by internal factors in Japan. So you're going to have to look really closely at those internal factors versus expecting all this just to be reflected in the 10-year treasuries or in treasuries in general, just because they are a huge owner. And if this profile that happens here actually happens and they own all these treasuries, they're going to appreciate. So it's a good thing for them. It's more, like I said, about the fundamentals of Japan. I'm not an expert by any means on that. I can look at charts. It looks to me the yen's going to stay under pressure. It also looks to me that we're still trying to max out some of these gains in yields here. And I'm just going to a super long chart here. Let me bring this. So this is this is sort of interesting because I have the market grid. The big move down never happened. The markets, you can see where, let me draw this in so you can see where I'm talking. It's right here. This spike down here is not, this is not prices. The price low is right here. This is what was being projected in these crazy downtrend at that time. But now what we look like, we probably have, this is probably a, I'm just drawing this in. This is most likely, I've got the disappearing arrows on. Let me turn that off, bear with me. Yeah, so what we're looking at from here is probably a 1-2 pattern. This is wave 3, A, B, C, 4 right into these fibs. And then you see there's some new fib targets here, but there's also these existing ones that are here. So this is likely to be this up here is likely to be the 5th wave move, and that's well into, these are very big numbers. This is a monthly chart. I'm going to give these numbers to you here in a second. And those upward projections right here are for yield on the 10-year of 6.4%. And I've been somewhat arguing that what we're likely to see as we go forward here is a potential for inflation to have this echo bounce. And let me just see if I can get this is somewhat interesting. There's another number that I forgot the symbol here. But look at the, this is the consumer price index, and this is what the algos are projecting. Doesn't look like the Fed has anything under control. And so this is, I think this is an interesting configuration here. And it actually suggests that, you know, CPI is going to continue to rise. And I have this other indicator. Let me just see if I can get. I'm trying to find this symbol I was using the other day. Yeah, this is the one I wanted. Okay, I found it. So this is the year-over-year number. So that was a different index we were looking at. But when you look at this, this is what I was talking about. The algos are suggesting that we're going to see the CPI year-over-year come back into probably 3.5%, 4%. And if that happens, there is no... I would say there's no decrease in yields. If anything, there might be increase in yields going forward. And there's a few people starting to talk about that. I suspect if this projection is right, now I'm looking at where my cursor is right now. If you can see this, let me draw this in because I never know if you folks are seeing the same thing. So let's make sure that you are. So right here's where the last report we had. This is what's being projected. And this puts us up around 4%. Then as we go out, and then at some point here, we see, you know, this is 2017 that we're looking out in. I'm sorry, 2037 that I just drew that out to you. So this is a very long-term kind of look. But this move right here is, this is 2028. Right here where I'm drawing is going to be roughly 2026 next year. So this is likely that we see the peak in inflation if these algos are right. And I could show you, looking back, they've done really, really, they've been very accurate in predicting this over the time. So I'm suspecting that we will see those kind of numbers. So yeah, we only got 20 minutes to go because we got such a late start. Let me just close out some things. Let's go take a look at the markets here. I'm going to bring this to an hourly graph, and we'll rescale this. It's interesting, the hourly is still projecting higher. Looks like we're going to have a fairly firm close. We're almost there now. I don't see any big disasters coming off from there. We're looking at 37. The high was today. The high of the market was 46. And like I pointed out earlier, if we look at the market grid for today, 44 was R3. So there was a decent reaction off of those levels as we look at this from a daily standpoint. But look at the daily, we're still seeing upward projections. So we're probably not done just yet. Yeah, let's go over to the hourly chart. Now the setup that I'm usually looking at, and I'll show you, is always circles around this hourly chart. But if you look at the fib targets right now, we got 52.12, 52.53, 52.78. If you reference the Substack that I put out last night, then you'll see this 52.20, 52.37 is going to be a key level. We'll probably see that next week. That's another 100 points to the upside. Think about it. We still have the manipulation game going on. We still have the earnings coming out. They're going to keep juicing this thing. So it's going to be hard to be negative. They tried to do it on the Meta, but you can see just hours after that, we got Microsoft and Google and everything's wonderful again. And it's all about earnings. There's no mention of the Israeli situation, everything that literally a week ago we're sitting here and we had the overnight reaction to Israel, I'm doing air quotes, attacking Iran, and which not sure it ever really even happened. It seemed to be just noise. And, that was the biggest concern on the planet last Friday. No concerns now. Microsoft's good. Google's good. Market's good. So let's go over to this other graph here. Yeah, so we're selling this thing off a bit now. The 5-second chart. Let me just bring this up. See. Oh, that was okay. Here's a 5-second chart continuing to, let me put the, let's put the PPM 200 back up here. Yeah, it's still negative. We got the 200 period moving average on the 5-second coming down. So it looks like they're trying to print. Yeah, we're just back into this downtrend. There's a pivot zone right here at 51.36. That'll be probably a ceiling here. Looks like we'll print up there. Maybe we can get back up to 238. There we are, just printing right into those numbers right now. But this is what I wanted to show you here. The hourly chart still has these upward formations coming in. We just traded back to the 10-period moving average. 51.31 should have held. It did. And that's probably the bottom end, but we're just going to trade in a sideways mode here. Now, one of the things we can watch as we come into the close is this 5-second chart. This will be right at right at around the 10 minutes till, in about 2.5 minutes. We usually get some type of move to indicate what type of activity we're going to get there. Yeah, I'm just looking at see if we're getting any indications yet of the buying or selling coming on the close today. Yeah, so the algos are suggesting a little stabilization here on this 5-second chart. I always show you this. Has got the 200. It's trying to turn up a little bit. We're probably going to, we just got fib targets to the upside up to 38, 39 up here. Right now, the 200 is at 37.50. The algos are trying to turn up here. One of the things I've told you on this 5-second chart, you have to have the premium and real time, but when you start to see the moving averages projected above where the 200 is, this is usually bullish, so we're probably heading towards this 38, 39, 50 range. On the upside, you can see we have Fibonacci targets here. We'll see if we can continue to get this. You see the 200 algo down here at the bottom, suggesting a little bit of flatness, and then as we come into the last 10 minutes or so, a potential bid coming in. We'll see what we get here. We're right now at 49. Let me look at something here. Yeah, we got about 51 seconds to go right now. Yeah, that's exactly how to do it, Lothbrock, is to use those three charts, the 5-second, 1 hour, to confirm the direction. We'll continue to watch this. You see the algos are starting to project a little higher. We're coming in, we're just about at that 10-minute till mark where we'll start to see some of these MOC orders start to come in. This is the little downward fall that it's projecting, and then right at about 30 seconds after the model, I have another machine running these algos, so it's kicking me out. Apologize. Yeah, so now they're trying to bottom out right here, see if we can get any kind of move up. We're on that 50 market, starting to get. What I like to show here is that the algos are continuing to update here. Right now, it's really just quite flat. They're projecting 38 to around 35 range, slight upward bias right now. It's trying to build. This is where the 200 algo down at the bottom is suggesting a little bit of a run, but it's really this 200 period moving average on the is 37.36 is resistance. I've told you folks this before. This is a 16.6 minute moving average at 200 on 5 seconds. We just got some new algos, new projections up here. We got targets for 39, 40, and 41.25. So we're going to have to get through this 200 right now at 36.50. We're trading 36.75, so it's trying to get through here. But it looks fairly quiet as we're coming in here. Yeah, so someone's asking about the accuracy rate. It's an upward, right around between 58-65% most of the time when you're seeing the directional move. You'll get about 60% of the move. Sometimes it will be exceeded, but it's fairly accurate. You see the algo down at the bottom here is just flattened out, so it's just really just kind of, that was at 31.50, so we didn't get that blast up to these fib targets. So we're probably, if anything, we'll probably see some profit taking coming into the weekend. Yeah, here we are, new fib targets. We just hit that. So we had 3 fib lower targets come in. Printed down 34.50. Yeah, I think that's probably extreme range, probably between 37, 34. We've got still 8 minutes to go. Yeah, it looks pretty stable coming in. You can see the algos as we come out. This is the final minute, projecting around 35.50. If we look out, this is some moderate fluctuation. The 200 is trying to flatten a little bit. Basically, we've seen some really big moves right after the cash closes, so that'll be it. Yeah, if let's bring up all the charts to see what we're seeing here from the standpoint of the algo. So over here is the 1 minute. It's actually projecting slightly lower. The 5 minute is slightly lower. Let's blow that up full screen. Really just kind of stable, probably staying below these moving averages. And then if we come over here to the hourly in this final few minutes here, we're right on the 10 period moving average right now. That number is 51.31. So that's going to be very solid there. We're coming into the end of the week, so it's interesting that all the algos are pretty flat here. Yeah, imbalance 950 million sell side is what I'm seeing here. Yeah, just hanging right here at 34.75. Like I said, we're probably just going to go out right in this range here. Let me go back to the full array. Let's take a quick look at the 5-second again. It's trading down toward this Fibonacci 33 handle. 31 is going to be that support, which is that 10 period moving average. Yeah, Jeff, woulda, coulda, shoulda, right? Yeah, Yeah, we're getting some selling. Here's some of that selling coming in on the 5-second down to 31. That's where the support is on hourly. So it's already trying to set up potentially a little bottom here with about 3 to 4 minutes to go. Probably come back into 33. Should be fairly solid here at 31. Yeah, I'm just looking over here at TradeStation for a minute. This downward, yeah, this is pretty sloppy close, I think. $31.75 prints. Got about 3.5 to go, roughly. Yeah, you're braver than I, Jeff. I very seldom hold anything over the weekend. But 32.50 should hold here. I'll move this over. You can see as we come right into the close, it appears to be a little bit of a bid building here. Not a lot. Be lucky to get back to 33, 34 from here. Well, here we are, 33 we're ready. Maybe back to the 235. This is probably the low print that looks like we printed what? Yeah, printed 30.75 low. I'll go suggesting here right with the last minute to go a bit of a bid. You can see the projections for the WTRs are trying to improve a little bit, but not much, basically flat here. Here's 33.50, so here we go. We should head up towards that 35 range. We're starting to see a little bit of upslope. You're seeing the acceleration, if you can see where my cursor is over here, bit of an acceleration. And for the 5-second, I just use the 200 period moving average, and really what I want to do is detect we'll call it the underlying trend is through this 200 period average, which is 16.6 minutes. And it's saying here with right in the final minute or so, we're just about there. It's going to have a bit of a bid, but nothing special. But I suspect this sell-off was part of that MOC order, trying to front run it a little bit. So we'll hang out for a close and I'll come back on screen here. All right, we're in the final minute here, folks. I know a little delay, but we're getting a little bit of the bid to come in. We just got fib targets all the way up to 37. The algos are all turning up. So that was what was being predicted in that final minute, was a bit of a bid, nothing big. I mean, now we just sold it off. They just dropped it. So there's your selling. There's your MOC selling. And the algo changed completely. Look at that. That's the close there. Yeah, so you got a little of a seller right there at the close. So let's come over here. So a bit of an interesting pattern here, folks. This is the daily. There's two things that I want you to pay attention to on this chart. And it's going to be this pivot number at that 5220 that I've been talking about. So 5220 to 5237. That probably sets up, let's do some, let's set up something here as we come into this is the final trades. And like I said, my biggest thing that I'm watching this weekend is going to be our intermediate database to see how much traction's left. We're at 61%. Does that drop to 58 or lower? See if that's muted or not. I still think there's a lot of deterioration going on behind the scenes. And so, you know, we'll see how our short-term database, it's at 15% bullish. That's a joke. There's virtually no stocks participating on a short-term level. This is all being index-driven and top-end index-driven from that standpoint. But as we look at this daily chart, we've got two things out here. We've got this red number here. It's actually 5230.76 is this plot right here. Let me blow it up really big so you can see it. And I'm going to draw this pattern in because I think this is more likely what we're going to see from here. Okay, so let's do this. So we get this move down here. Now we've got a move here. I think we probably do this up into these levels. I think we do not see this upward fib targets would be a new high. And then we start some kind of move down potentially. And I'm going to bring up the weekly. This is a daily chart, but some type of move down from there. Let me fix this so and let me fix this again so it doesn't come off. So we got this move down here, and then we're getting this move here, and then we probably get up to here, which would be kind of ABC retracement. And then I think the potential is still to the downside, still heading towards this 200-day moving average, which will also be, I'll show you here, we're going to bring up the weekly chart, but this looks to me to be the configuration. The alternative to this, which the only way, my opinion, that we're going to see that this scenario would be that we would do this and then hit these upward fibs. This is the all-time high, and make a new high and hit these higher fib numbers would be if the database on a short-term basis actually improves. There's not going to be enough stocks in trend mode to be able to drive this thing higher. So I'm leaning strongly toward the first scenario that I talked to you about rather than the second, which is more optimistic in this pattern. So let's just erase this and let's go to weekly. We'll kind of finish on some analysis here. I'll write this up over the weekend in the Substack. But we did get, if you go back to Monday's scenario and you look at what I told you we're likely going to see here is this week was going to be an inside week. Very easy call. I didn't think we would make a lower low from last week. I thought we would be in recover mode. And then I'm going to do my best to draw in what I think will be next, okay? So let's go through that. So this is the inside day. The high last week was 52.13, the low 49.63. This week 50.06, 5,006, and 51.46 inside bar. And typically when you get these big bars and then you get an inside bar, what we should do next week is make a slightly higher high than what we made this week on the recovery. And then we should get a reversal. Now the high that I mentioned week before last, 52.13, it's okay if we take that out. I just mentioned the two numbers to watch, 52.20, 52.37, and I am expecting a rejection out of those levels. So let's draw in what that would look like, okay? And we'll try to... All right, so my expectation then would be for a bar that would reverse down. We do have support right here at this 21 period moving average, but ultimately what typically we'll do is we'll take out this week's low. So let me redraw this. We'll take this bar will look like this, where we get like another reversal pattern, and then the following, this is weekly graph, the following week we head toward this 40-week moving average, and it's also going to be a 10-month moving average roughly. And we still have this nice angle of attack. And then this is my scenario I talk about all the time here, is that on the upside then we start to get sandwiched by these moving averages, and the markets trade in this wedge with the rising 40 and a declining to flat pattern on the 10. So this is what it ends up looking like. And then somewhere out here, which is out in somewhere in June, July, could be early June, is where we start to make a move, which way we go from here. And, you know, there are reasons to believe that we could even get into, this is weekly, bigger corrections that would put us down here, way down at this 200-week moving average. Probabilities right now are about 20% of that, but this pattern has a couple things that we're going to have to see to unfold. So let me just dump all this stuff, and let's just... So this is the realities. This is what I told you last week, I recall, is that we should stay above the 21 rising period, and we should stay below this 10. Let me put that a different color. So the 10 is right here. We should trade inside this range. So use the simple 21-week, 10-week moving averages. We might bounce a little bit above the 10. We should come back in. The 21 period moving average on a weekly basis should be really decent support. I still am talking about, as far as the markets go, is that the primary strategy is going to be straddle this thing. I don't think we make all-time new highs out of here. Certainly with the manipulation of the earnings, they're likely to do whatever, but we got a lot of the big boys out this week, so they were able to get this little pump that we got this week within this range that I just laid out for you. And yeah, I'm just looking at a couple comments. So that's probably a good ABC extension down to 50-70. But I think we stay in these ranges, folks. And I'm just looking, I know you're not seeing the chart here. Let me put it back up. You're really just looking at right now, 50-10. It's interesting because we look, 50-10 is the 21 period moving average, the low of the week, 5,006. We bounced right off of that. That was the exact number that we needed to bounce off, and we printed that, and off we went. And like I said, the volatility that we've seen over the last couple of days in this market has really been nothing more than this range volatility. There's no new trend, no new nothing coming out. And if I, let me just see if I can find this fairly quick. Bear with me, I'll bring this up. All right, let me come back up here. Yeah, so I brought up the WaveTech Database. Dailies 15.71% bullish. We saw moderate buying yesterday, even though it was kind of a flat day. I don't expect to see, I do expect to see a little bit of buying, but we've got to get over 22% to signal that we're going to potentially consolidate and then set up a bottom. It is, I'm going to stick to it. This is week number 2 now. It's going to take at least another 4 to 6 weeks to set up a really solid base for trending stocks that are able to carry a trend, right? I mean, think about it. If all right now, 85% of all the stocks are trendless. They've been crushed. They're trying to reestablish, trying to get patterns to set up that is going to indicate that there's a possible appreciation on short term. So even though from an index standpoint, you can see these bounces when you're looking at indexes, you're not going to see the backdrop or the number of stocks to participate that are capable of carrying this much further. Now, we could stay sideways. The lows that we saw this week could be the low of the pattern. We could consolidate for 2 or 3 weeks, and we could get this database to turn in exactly what I'm telling you. But it's going to take at least that. But on the other side of things, I will bring back the database here. This is the other side here. Is what we're looking at. I just brought up the weekly, 61.56% bullish. I expect that to drop down below 0.58 tonight. Could be as low as 0.52. I think there's a lot of stocks that have been absolutely, I would say, demolished to the point where their trends are breaking. And if we get into a cycle and we get this database to get down to 52, 48%, and even worse if we get down to 42% bullish on the intermediate, that just tells us we got longer to rebuild, but it also tells us something else, that there's more vulnerability for the trends to continue to go down. So right now we still have a decent base on the intermediate. After this week's activity, we'll see what it looks like and what the forward-looking elements are. Now, one of the things that did happen, we saw 3 of the sectors that were long down at the bottom of this page, which were consumer, cyclical, healthcare, and technology, all got let go on on Monday morning, okay? And so now we look at what's left. We've got materials. Materials still short in cycle, 99 days of 272. Capital goods, 89 of 166. And then the conglomerates is getting pretty extended. And then we're finally looking at some of these other sectors that are still positive. But right now we have 9 to 12 sectors long. Groups, which is 75%, our industry groups, or individual industry groups, are 63%, and the overall database by symbol is at 61.56. So this is going to continue to, I believe, step back, and if that's the case, then that's ultimately going to suggest more sideways to down. I'm still looking at possible down into, we come into May, early next week, we start May, we start to see that deteriorate even further. Then all of a sudden we could be easily at the end of May, early June, possible turnaround then. And the key elements are going to be is how this unfolds. And this is, you can look at charts all day long, and I do, okay, and I do make projections, but if you look at the algos on the weekly charts, they're suggesting loss of momentum, more downside. They're not turning around by any means. In fact, they were showing one positive week, and then we should see loss of momentum again. So everything is basically confirming. I always tell you folks, I look at multiple items on the chart to make sure that we're getting those confirmations and what we're walking forward. And, what we're seeing right now is just not any kind of collapse of the market, but we are seeing a deterioration of the trend that was in place going all the way back to October. So this is the first big rotation of that trend. And right now it's still healthy. We stay on the intermediate basis above 42%, start to see the daily base model start to get some stability, and we get some feel there. Then that will be the time where we can start talking about, okay, the market's probably bottom. We can start looking for stocks to buy, and we can start looking at positions for the indices to hold for a bit longer. And whether it's into the election or beyond, we'll have to see how all that folds out. We've got a lot of interesting times ahead of us this year, folks. So I think let's see here. I'm just looking at some of your comments. Yeah, who knows what big money is doing. I don't see any indication that there's a lot of folks buying a lot of stocks. And you have to understand that big money owns individual stocks, not indexes. So what we're seeing, that's why this database is so important. And we'll start to see when they start to accumulate. But right now, I don't see it. Like I said, we've seen bounce from 11% up to almost 16% on the short-term database. There's metrics there that just have played out for decades. You have to realize this database I'm talking about, been watching every day, every week since roughly 1998. So it's been a long time. I know this really well. I know the characteristics of what happens. And if you just look at, even as we came into last October lows, it was telling us that that was going to happen. And we got a nice, we'll call it 6-month run out of that. And now we're getting the first refreshing or the rotation that happens on intermediate. And then we have to see whether that rotation ends up to be something worse or if it's just a consolidation before we go higher. And at the moment, I'm still looking at consolidation. We go higher, but there's a lot of things we have to watch. So anyway, folks, I think that's going to do it. I apologize for all the crud getting a late start and everything. Appreciate everybody hanging out and little randomness getting into the flow after an hour of frustration of dealing with technology. I find that, yeah, that's funny, getting flashbacks to 2022 analysis. I know. I am too, actually, Pedro. Appreciate that. Yeah, I would, yeah. But like I said, to kind of tie this down for what we did today, is I do believe there's a big manipulation through the analyst community and the companies kind of teaming up together, make sure everything's underestimated. So every time we go through earnings, things look good and they get a bid. They can rotate stock. They can sell into the strength. There's all kinds of games that get played. Any of us that have, those of you that have worked around the institutional desk, you know what I'm talking about. And I spent a fair amount of years in that level, even though primarily on the bond side, but it's all the same. Now, I have plenty of buddies, know a lot of people that have been on the other side of the desk, so to speak. So, there's just a lot of games that are being played. And I joke that it took me 40 years to figure this out, but it just becomes more and more obvious. And it seems like, for whatever reason, everything that's out there that's kind of skeptical or questionable, maybe is a better word, is starting to be revealed more and more as we go forward. So maybe by this time next year, we'll actually know what truth is. We'll see what the actual reality is. Anyway, who knows? I shall talk to you folks Sunday night and look forward to next week. We've got another round of earnings to go through, so we'll see then. All right, have a great weekend. I'll see you on Sunday night.